certainly excited for this next speaker because it is about personal finances and getting control of our finances. Here to discuss this with us is Raj Bhaskar with Hurdlr.
Good morning. I'm Raj Bhaskar, co-founder and CEO of Hurdlr, and we're a startup that helps agents manage their finances and run a more profitable business. Now, for most agents, because you're self-employed, your personal finances and your business finances go hand in hand. Also because the majority of your personal income likely comes from your agent business. Now, I want you to think about your finances as a great big funnel, okay? So at the top of this great big funnel, this is where all your leads are, okay? They're all the way here at the top. And as you come down this funnel, you're doing all this work. You're doing all these appointments, you're running around to open houses, you're representing clients, you're doing all these emails, you have all these contacts. And all the way here at the bottom, that's where your income is. So it goes from all the way to the top, all this work, and this is what you have left at the end of the day. Today, I want to turn your funnel upside down and get your income at the top. We want to start with what your income goal is, because I'm going to help you find opportunities to grow your bottom line. Who doesn't want to make more money? So now that we have your income at the top, the first question is, how much income do you want to make? Right? Everybody wants to make a lot of money, but have you actually written it down? It's a different thing to think about it in your head than it is to write it down. But it's very important that you do that. So have you set that goal? And then what about your expenses? When was the last time you reviewed your expenses? I'm asking you this because today we want to sharpen your focus and sharpen your spend because that's how you're going to thrive in this new market. So I'm going to go through 3 things in detail today that are going to help you hit that goal at the bottom of your funnel. Number 1 is linking your daily activities to your income. Number 2 is streamlining your expenses. And number 3, it's probably the sexiest one of all, leveraging tax deductions, right? Why did I pick these 3 things? Well, if you take your income, you subtract out your expenses, and then you take out your taxes, that's what you have left at the end of the day. I call it the true profit formula. Income minus expenses minus taxes is your take-home pay. So we talk about number 1, linking your daily activities to your income is an exercise that basically ensures that everything you do throughout your day ultimately contributes to your income. So ultimately, that has to be measurable. It can't just be something that you think might do it, and you can try that for a little while, but you have to be able to measure it and link it to your actual income. So this requires you to know your numbers. It requires you to do the right activities that generate income for you, and then it requires you, knowing those 2 things, to do the right amount of activities. So Gail, please turn to the first slide. So the first thing we talked about is setting that goal. How much money do you want to make this year? It's a very important thing for you to do, to write that down. You can do it while we're talking today, because this is the key number that you're going to work backwards from. If you don't know this number, you can't figure out how many things you need to do today and what are those things. So that's the first thing we want to do. We want to pick that number, and we want to work backwards from there. And this is going to help us quickly figure out all of your numbers. For example, the next number you need to know is to hit that income, how many transactions do you need to do? So how many sellers do you need to represent? How many sellers' homes need to be sold? How many buyers do you need to have actually buying houses? How many transactions do you need to do this year? And so we need to take into account, to figure out how many transactions you need to do this year, what your market limitations are. So if you're a new agent, you may not know what your average commission is, but you could do the research to find out what the average transaction value in your market is. And from there, you can back calculate what your average commission might be. If you sold a few houses last year, you may know what your average commission is. So you just take that and divide it by that income and pops out that number. Maybe it's 5 transactions, maybe it's 10 transactions. But you can use these figures to calculate how many transactions you need to close. And finally, in linking your activities to your income, we want to look at that full funnel of activities. So if you start at the top, you get your income goal. The second thing is how many transactions you need to close to hit that income goal. But think about what leads to those transactions. How do you get those clients, right? You have to meet with those clients. To get those listing agreements, to get those buyer agreements signed, you have to meet with clients. So these are your appointments. And you need to figure out how many appointments do you need to get that one listing agreement, right? It's a very important number for you to track. We call this a conversion rate. So is it every 5 appointments leads to a listing transaction? Because that's a 20% conversion rate. Or is it every 2 appointments lead to a listing? That's a 50% conversion. When there's a downturn in the market, this conversion rate is very important for you to track because conversion rates tend to go down, right? That's really the big thing that happens as an agent business. It's just that your conversion rates go down. So if your conversion rates go down and you know this and you're tracking this, all you have to do is more activities, right? And that way you can protect your income. But the conversion rates go down because sellers get skittish. They're not getting the offers that they desire. They're not getting as much money for their home. Buyers don't want to spend the money. But you can help walk them through that. But the best thing you can do for your own business is to make sure you're doing the right amount of activities. So if you set your goal at $120,000, how many transactions is that for you in your market? Is that 10, 15, 20? And how many appointments do you need to have to generate that many transactions? Is it 200? And then if you back out to get the number of activities, activities can include texts and email, all the way up to coffee meetings and meetings at home with your clients. Is it 1,000 activities? It could be a lot. It could be 2,000 activities. The key thing is you need to note it down, you need to track it, and then you should adjust it on a monthly basis. You can do it more often, but at least do it monthly because that sets you up to actually hit that income goal at the end of the year. So link your activities to your income, and by doing that, it's going to help you stay focused through this market shift. Moving on to the second topic, streamlining your expenses. Now, you know, income minus expenses equals your profit, right? So you want to make sure that all of your expenses add measurable value to your business. So when was the last time you reviewed your expenses? I personally take a deep dive into mine every quarter. I do a little bit more. I do quick reviews every week, and I do a little bit more every month. But every quarter, I do a deep dive. And I'm specifically looking at my expenses and which ones have not added any value to my business in the last quarter, and I cut those. So when I'm talking about your expenses and looking at which ones to cut, I'm not talking about your small expenses like your mobile phone, your mobile data plan. I'm talking about the big expenses all the way at the top. For most agents, your top 3 expenses fall into 3 categories. 1 is people, number 2 is office, and number 3 is advertising. So let's talk about each one and how you should think about that. When we talk about people, if you're a solo operator, people could be anybody that you're paying on the side to help you out. If you're running a team, it's your team members. And so when we look at people, you want to look at each individual and determine in a mathematical way, are they adding measurable value to your income? And if you take it a step further, what you really want to get is, are they adding more income than you're paying them, right? Because that's how you maintain a profitable business. The second expense is your office. So the first question to ask is, are your clients actually visiting you at your office, right? So whether you have a team or you're a solo operator, do your clients actually come to your office and visit you? If they do, that's great. Then you should continue with that expense. But if not, you should rethink that expense and see, could you work from home and do all your calls in the morning and then be on the road with clients in the afternoon? The third one is probably the most tricky one, and there's a lot of folks here today and a lot of technology solutions to help you out with advertising, to help you get all those leads at the top of the funnel. It's advertising, right? And so it's very hard to determine what your return on investment for advertising is. But one trick is to simply measure, does each dollar in ad spend that you have lead to more than $1 in income, right? Even if it's a penny more, $1.01, is it profitable? Right? And you can do this in a number of different ways. You can do this by each advertising expense, or you can do this as a whole. But if you can really get into it, that's where you can save some money. But The flip side of that is if you find places where you're spending money and you're making much more than $1 back, you can look at increasing that expense because that's going to drive your income. Now, the easiest way to review your expenses is to print out a list of your expenses by category from highest to lowest, right? And you want to do that because focusing at the top, at the most expensive items, that's where you're going to save the most money, right? I'm guilty of starting at the bottom often. I may go out and spend thousands of dollars on one thing, but if I get ripped off for $1, it really bothers me. So it's something I'm working on to really change that habit. But for you all, it's easier to give advice than to take your own advice. Start at the top, right? But how easy is it for you to print out that list? For me, it takes a few seconds on my phone. It's not only because I have a specialized app to do this, but it's because I have a credit card that I only use for business expenses, right? In our research, we found that over 90% of agents are putting their business expenses on their personal credit card, right? And that's called commingling. Now, the biggest issue with this is that it's very hard for you to then just look at your statement and figure out what your business expenses are for areas that you can cut, right? So the number one thing I'd like you to do with your expenses, if you're not already doing it, is please go get a credit card that you only use for business expenses. Now, this can be any credit card. It can be a consumer card. It doesn't have to be a small business credit card. You don't need a small business bank account. Just pick any credit card. Just don't use it for personal expenses. Because once you do that, now your statements can be reviewed by you. Or if you hate looking at these numbers, you can pass it on to your accountant, and your accountant can run through it really quickly and help you figure out, are there any opportunities for expenses to cut? And now my favorite section of the day, leveraging tax deductions. So we talked about this funnel, right? So at the top of this funnel are all your leads, and you come down here and you do all this work. And then I talked about the bottom is your income, right? But right here, right about here, as you start getting to the narrow part of that funnel, bam! That's when Uncle Sam comes through and takes his 30% commission right out of your paycheck, right? And so if you're a new agent, you need to plan for taxes. You need to set aside around 30% of your commissions as they come in, so when you have that tax bill, you can pay for that. But what I want to focus on are the top 3 tax deductions that a lot of agents overlook for a number of reasons. The first thing you have to do is track every single one of your business expenses, right? Because that's the only way you can ensure that you never miss a deduction. Now, tax deductions can be confusing. Some folks don't understand what the word deduction means. Let me put it this way. In many cases, it's like having a 50% off coupon for all of your business expenses. So you go here and buy a coffee for your client, or you pay for this business expense. It's like having a 50% off coupon. Who doesn't want a 50% off coupon for like everything you buy, right? So you have to track it to never miss a deduction. Get that card, get an app, or do both. It'll make it very easy for you. The number one deduction that agents overlook is your mileage deduction. It makes sense because it used to be a pain to track, and a lot of people think it's not worth it. But let's run through the numbers. You can deduct 58 cents for every mile you drive for business, right? So that's pennies, right? But think about 10 miles gets you $5.80 back. 1,000 miles, which you can do in a month easily, is $580 back. And if you do 10,000 miles in a year for business, that's $5,800. That's a lot of money, especially if your goal is $50,000 or $75,000. That's a big chunk of savings. So if you don't have a good mileage tracker on your app, on your phone, get one on your phone. The good ones cost $5 to $8 a month, and you can make that up in one drive. The second most overlooked tax deduction are client meals. This is an interesting one. We've done research into why, and what we've found is that a lot of folks think that because you enjoy the meal, you can't deduct it, right? That's just not the case. If it's for business, and it can easily be for business, right? Because you're taking your clients out, it's deductible. You can enjoy it and you can deduct it. And this can be for prospective clients. It can be for past clients. It doesn't have to be just for your current clients. Now, the other thing I'll add here is meals include beverages. That's an important point, right? Let's not take the literal term meals. Beverages are included. So I don't know what kind of beverages you like. I prefer to drink coffee. I had a coffee upstairs, it was $6. But I can deduct that coffee as a business expense and save half of my money, right? Coffee isn't cheap these days. So you should deduct it if it's for business. The third major deduction that a lot of folks overlook are client gifts. And in our research, we found it's because agents think, well, it's a gift. So how can I deduct that gift? Gifts are deductible because you can classify it as a business expense, whether it's marketing or client appreciation, you can deduct it. And again, just because you enjoy doing these things, you enjoy giving gifts, you have to leverage these things. Meals can be expensive these days, gifts can be expensive. You want to really sharpen your spend there because if you lower your expenses, your profit goes up. The number one way to increase your profit is to increase your income, your revenue. The number two way is to cut your expenses. The number three way is to leverage all your tax deductions. So why not do all three? So if you're not doing any of these things today, it's easy to get started, right? You can do all of this that I just said on paper. Hopefully some of you wrote your number down, your goal, if you haven't already, but you can do it on paper. You can also get an app to do all of this for you, but I understand that not everybody's into tech. And some agents get a coach. The key thing is it's important to take action, right? It's kind of like working out. If you don't work out, it's best to start off casual, walking, right? And then ultimately you want to get into a regular routine. Ultimately you hire that personal trainer, and then eventually you get that Fitbit, right? So here we're talking about getting a Fitbit for your agent financial performance. But first is simply the mindset. So to thrive in this market, I want you to, number one, link your activities to your income. Number two, streamline your expenses. And number three, leverage your tax deductions. Thank you for your time today.